You think the economy is stable just because the mainstream media talks about growth and record profits. You are being completely lied to while the real financial disaster hides in the shadows of the $22 trillion private equity bubble. Look at how these massive institutions manipulate valuations while you get squeezed by inflation and stagnant wages. Before we peel back the layers of this giant fraud, drop a comment right now with your current age and the exact dollar amount you manage to invest every single month. Let us see who is actually taking action and who is just letting the elites gamble with their future. The biggest trap you can fall into is believing that private equity is the smart way to build wealth, because those funds are built on a foundation of cheap debt and questionable accounting that would never fly in the public markets. While they feed you empty promises of superior returns, your actual purchasing power is melting away at a rate of over 3% every single year. If you keep your money trapped in opaque high-fee structures or waste it trying to look rich while the system collapses, you are the ultimate target to get wiped out when the music finally stops. Stop trying to time the market or chase those fake private equity returns, because that is a sucker game that will leave you with nothing but your tail between your legs. What actually creates real generational wealth is staying in the market with total transparency. You need to stop playing the consumerism game where you buy a brand new vehicle just to impress people who do not even care about you. Instead, you should be driving a reliable 2006 used car and keeping your living situation as minimalist as humanly possible. Take every single extra dollar you save from changing those toxic spending habits and put it straight into wealth-building vehicles like broad market index funds. You do not need to be a Wall Street insider to do this. All you need is the discipline to execute a bi-weekly dollar-cost averaging strategy into funds that actually represent the real economy. Look at historical data where a standard $10,000 investment in an exchange-traded fund like VOO or SCHD grew over 500% over a 14-year period. Set up automatic transfers into a tax-advantaged account like a Roth IRA, so your compounding growth can compound completely tax-free. Building wealth is not about finding a magic stock or guessing the next private equity breakthrough. It is about long-term consistency and keeping your emotions completely detached from the daily market volatility. The system wants you to stay distracted by the performative headlines, so you keep consuming and stay trapped in the rat race. Break the cycle by choosing discipline over convenience and automated investing over impulsive shopping. If you look closely at how the private equity world operates, you will realize that the gap between the middle class and the ultra-wealthy expands every single day, because most people care more about looking rich than actually being rich. They want the giant house, they want the luxury designer clothes, they want the status symbols, just like these private equity firms that crave the massive fees and the hollow prestige of being kings of capital. But when you strip away the optics and look at the actual numbers, you see a completely different story of debt and financial insecurity. The reality of inflation means that a dollar today is worth significantly less than a dollar 5 years ago. And if your income is not compounding faster than the rate of money printing, you are losing the game by default. People often ask me how they can start investing when they feel like they have no money left at the end of the month. The answer is always found in auditing your daily habits and eliminating the hidden leaks in your budget. You do not need to wait until you have a massive lump sum of $50,000 to become an investor, because that day will never come if you do not start small right now. By automating a bi-weekly transfer of even $50 or $100 into an index fund that tracks the top 500 companies in the United States, you are participating in the actual growth of the global economy instead of just being a consumer of broken products. The magic of compounding interest works best when it has decades to run its course without interruption. Every time you pull your money out because of panic or because you read a scary news headline about a bubble bursting, you reset the clock and destroy your long-term potential. Serious investors do not care about the daily noise on television or the dramatic speeches delivered by politicians. They care about cash flow, they care about asset allocation, and they care about building sustainable structures that protect their family from economic instability. Think about what happens when you buy a brand new vehicle off the lot. The moment you drive it home, it loses 10% or 20% of its value, and you are left with a massive monthly payment that prevents you from buying assets that actually appreciate. Compare that to driving an older vehicle like a 2006 model that is completely paid off, where every single dollar that would have gone to a car loan can now be redirected into high-quality dividend growth funds. Over a period of 10 or 15 or 20 years, that simple choice alone can mean the difference between retiring early or working until you are 70 years old. The market has survived world wars, it has survived recessions, it has survived different political administrations, and it always rewards those who have the patience to sit tight and let the numbers do the heavy lifting. You must learn to see through the grand illusions of the modern world, where the financial sector pretends to be strong while their economic foundations are quietly eroding from within. Your personal economy is the only economy you have complete control over, so you cannot afford to let national politics or institutional drama dictate your financial destiny. Stop expecting the government to fix the housing market or lower the cost of groceries, because their incentives are completely different from your incentives. They want to maintain the appearance of strength and stability while you need to focus on actual survival and true wealth accumulation. When you look at vehicles like a Roth IRA, you are using a legitimate tool designed to protect your future retirement withdrawals from being taxed by the state. This means every single dollar of growth you achieve over your lifetime belongs entirely to you and cannot be touched by future policy changes or private equity collapses. It is incredibly empowering to know that you are taking direct responsibility for your future instead of hoping for a miracle or relying on social safety nets that might not even exist when you get older. The process of going from $0 to $100,000 is always the hardest part because compounding interest feels slow and invisible in the beginning stages. You might invest for 2 or 3 years and feel like your balance is barely moving while your friends are taking expensive vacations and posting their highlights online. But around year 7 or year 10, the snowball effect begins to accelerate and suddenly your money is making more money in a single month than you contribute from your actual paycheck. That is the exact point where you transition from being a worker who exchanges time for survival into an investor who uses capital to purchase freedom. Do not let the performative nature of our current society trick you into thinking that wealth is instant or flashy. True wealth is silent, true wealth is boring, and true wealth is built through repetitive daily actions that most people find completely unappealing. You have to be willing to look ordinary today so you can live extraordinarily tomorrow. Look at the people who consistently win in the financial markets, and you will find they are not trading penny stocks or chasing the latest speculative bubble. They are consistently dollar cost averaging week after week, month after month through the ups and downs without ever looking back. They understand that market drops are just opportunities to buy shares at a massive discount rather than reasons to panic and sell everything. When you change your mindset from a consumer to an owner, you start seeing the entire world differently. You stop looking at a product and thinking about how much it costs, and you start looking at companies and thinking about how much profit they generate for their shareholders. By owning index funds, you become a part owner of the most profitable enterprises on earth, and you allow their workers and their executives to generate wealth on your behalf. This is how you opt out of the broken system that rewards the top 1% while punishing everyone else who relies solely on a traditional paycheck. You have to build your own financial fortress that can withstand any political shift or diplomatic crisis that happens on the world stage. Whether the country is acting like a real superpower or just a performative superpower becomes irrelevant to you. Because your wealth is anchored in tangible, productive assets, make the commitment today to stop falling for the optics and start focusing on the actual mathematics of your life. Cut out the luxury subscriptions, stop going to expensive dinners just for the social media photos, and invest the difference into your long-term survival. The numbers do not lie, even if the private equity firms do every single day on television. Take control of your asset allocation, maximize your contributions to accounts like VOO and SCHD, and let time do the rest of the work for you. Let us think deeper about what it actually means to build an absolute fortress around your finances. Because when you look around at the middle class today, you realize that most people are just one major financial emergency away from complete disaster. They live paycheck to paycheck while trying to maintain an illusion of luxury that is entirely funded by high-interest credit card debt. This is exactly what the system wants, because a population that is deeply in debt is a population that cannot afford to take risks, cannot afford to leave a toxic job, and cannot afford to speak their mind. You are effectively trading your personal liberty for a collection of consumer goods that lose value the exact minute you bring them home. If you want to break out of this loop, you have to become completely radical with your savings rate and stop caring about what society considers normal. Normal means working 40 hours a week for 40 years, just to retire on a fraction of your income while praying that inflation does not destroy your purchasing power before you die. Normal means spending hours every single week worrying about grocery prices and rent increases while the wealthiest corporations continue to achieve record-breaking profits year after year. You have to realize that nobody is going to hand you financial freedom on a silver platter because the institutional incentives are perfectly aligned to keep you consuming rather than investing. When you buy a share of VO, you are essentially taking back your power because you are redirecting capital away from depreciation and placing it directly into global economic engines that compound value around the clock. You need to understand that the global economic landscape is constantly shifting, and the strategies that worked for your parents' generation are no longer sufficient to guarantee your survival. You cannot simply work hard, save money in a bank account, and expect everything to turn out fine because the rate of currency devaluation will outpace your labor every single time. This is why shifting your focus from earned income to investment income is the single most important transition you will ever make in your life. You need to start viewing every dollar you earn not as money to be spent, but as an individual soldier that can be deployed to fight for your financial independence. When you spend $100 on an unnecessary luxury, you are not just losing that $100, you are losing the thousands of dollars that $100 would have generated over the next 20 or 30 years through the mechanism of compounding returns. This is the exact math that the upper class understands perfectly, and it is the exact math that keeps the working class trapped in an endless cycle of survival. You must train yourself to see past the immediate gratification of a purchase and focus entirely on the long-term trajectory of your net worth. If you look at the wealth distribution curves over the last 50 years, you will see a massive divergence where asset owners leave non-asset owners completely behind in the dust. This is not something that is going to change with the next election or the next political promise, because the underlying mechanics of modern capitalism are designed to reward capital ownership far more than physical labor. Once you accept this reality, you stop complaining about the rules of the game and you start learning how to play the game to win. You stop looking for shortcuts, you stop looking for the next hidden cryptocurrency that promises to turn $100 into $1 million overnight, and you start embracing the boring, predictable path of broad market index fund investing. It takes an incredible amount of mental discipline to watch the market drop by 10% or 20%, and instead of panicking, you actually increase your automated bi-weekly contributions because you know you are buying the exact same high-quality assets at a steep discount. This is where the real separation happens between the amateur investors who buy at the top and sell at the bottom, and the sophisticated wealth builders who use market volatility to accelerate their journey toward financial freedom. You need to develop an absolute immunity to the sensational headlines and the constant stream of negative news, because their entire business model relies on keeping your emotions heightened, so you keep clicking on their content. They want you to feel afraid, they want you to feel anxious, because an anxious population is highly susceptible to impulsive consumption and terrible financial decisions. When you automate your investing process using vehicles like VOO and SCHD within a tax-sheltered structure like a Roth IRA, you are effectively removing human emotion from the equation entirely. You do not have to decide whether today is a good day to buy because the machine does it for you every single 2 weeks without fail. Whether the market is up, whether the market is down, whether the politicians are fighting on television, the machine just keeps executing your long-term plan. Over a multi-year horizon, this systematic approach removes the element of luck entirely and replaces it with pure mathematical inevitability. You will look back in 5 or 10 or 15 years and realize that the simple habit of consistent dollar cost averaging was the single most impactful decision you ever made for your family's security. Stop waiting for the perfect economic environment to start building your portfolio, because the perfect environment does not exist and it will never exist. There will always be a crisis, there will always be a reason to delay, there will always be a new geopolitical conflict that dominates the evening news. The people who are waiting for everything to look safe before they invest are the exact people who will end up working forever, because by the time the market looks completely safe, the prices are already at all-time highs and the massive gains have already been missed. You have to be willing to invest when things look uncertain, because uncertainty is the exact reason why assets are priced productively in the first place. True security comes from the assets you own, not from the promises of a performative superpower or the temporary stability of a job. Your employment can be terminated tomorrow, your currency can be inflated away by reckless central banking policies, but your fractional ownership of the top 500 companies in the world cannot be easily erased. These corporations will continue to adapt. They will continue to raise prices to outpace inflation. They will continue to innovate, and they will continue to distribute profits to their shareholders. Regardless of who sits in the political offices, when you align your personal economy with the structural incentives of global capitalism, you stop being a victim of economic shifts and you start becoming a beneficiary of them. Commit right now to changing your financial trajectory by focusing entirely on what you can control, which is your savings rate, your investment discipline, and your asset allocation. Turn off the noise, ignore the performative spectacles on social media, put your head down, and execute your automated dollar cost averaging strategy every single week until you have achieved true lasting financial independence. Hit that subscribe button. Peace.